Today, we're going to look at 3 mistakes every first homeowner is making, including one tip that could save you $15,000. Let's start off at the top. Jaden, auctions. Tell me about auctions and how many first homeowners of ours are having issues.
First home buyers are saying like, nah, I don't want to go to auction. Too scary. I don't want to lose my deposit. Could have a deposit. With one of our clients, Vicky, shout out to Vicky. It's happening. She was, has been researching, looking for the market, found the right home, actually went in to make a pre-auction offer. So the agent's always like, hey, come in, give me an offer. We'll definitely consider it before auction. They never will. They'll just say, yeah, we're going to go to auction anyway. But anyway, she made a pre-auction offer, gave her like one of her better sort of offers and said, yep, this is how much I'm going to pay. They just said, nah, forget it. We'll see you on Saturday. When Saturday rolled around, she was only one of 2 people at the auction and ended up buying the house at auction for 5% less than her pre-auction offer. So I think that's probably one mistake with first home buyers in auctions, is not even putting their hat in the ring and not even sort of turning up because they're worried, well, what are the risks? But I think you had the opposite end of the story where, someone got excited about going to auction thinking there were conditions. What happened there?
Yeah, look, I think this is another one. So the first one is first homeowners not going to auction or not giving it a crack because they're worried about the risks associated. The second is first homeowners not understanding the risks associated with auction. So we had a client recently who was going to go to auction, but they didn't realize that when you bid, you're actually unconditionally locked in. So unless you've done your building a pest, unless you've spoken to your solicitor and done your checks before making offers on the property, you could be potentially getting yourself in a bit of a sticky situation where you're buying a property that has issues, or potentially locking yourself into a purchase where you can't secure or settle. So that's one thing to keep in mind. We are seeing some of our first homeowners, like you said there, Jaden, that are turning up to auction. I had one last night, Santa. If you're out there, mate, congratulations, where he actually turned up to auction. He didn't bid because he was worried about the risks associated, still registered as a bidder, and the auction actually fell through. There was no registered bidders. And after the auction, he was able to put an offer in and put his clauses in, which was 7 days building a pest, 7 days finance, 30 days settlement, which really de-risked the whole auction option.
Yeah, so on that, I guess my tips for de-risking at auction are, firstly, speak with your mortgage broker. Make sure your pre-approval has been assessed either at the current assessment rates or they've locked in the bank. If you got it within the last 3 months, for example, they're still honoring the numbers from your pre-approval. Because we had one, unfortunately, a couple of weeks ago, he found a place 3 months and 2 days after the initial pre-approval, and the bank's assessment rate had changed by 2%. And because it was outside that 3-month window, his borrowing capacity went from 450,000 to 330,000. It was pretty wild. It was actually one of the biggest differences I've seen. So definitely, if you go to auction, check with your broker, make sure your pre-approval and all the numbers are still valid. There's been no changes there. I think secondly, you want to have all your searches and checks in place. You want to make sure that the bank's going to accept that postcode, that type of property. You want to make sure your building and pests is in place, and you want to sort of be as prepared as you can. And thirdly, have your price. Sort of have your 3 prices, almost like the bargain price you're going to get, the price you're going to be happy with, and then you walk away price at the maximum. Even add in like 1 or 2% as a bit of a buffer there, where it's kind of like, what, if I'm at 550,000 and the bid's at 551, I'm going to go 555 just to try and secure it on that day, but also have that walk away price. I think it's an important thing, because in changing markets, and again, it depends where you are. We had Yash this morning, who's in Perth looking at buying, and it's a completely different market there on the West Coast compared to on the East Coast, where he's saying that on average there'll be 6 offers on a property. It's furious, it's frenetic. Like people on the East Coast trying to buy over there. So just know your market conditions. Even go and suss out a few options before you go, because it can either represent a really opportunity, or I guess at least give you transparency on where the market is on that property. Nathan, next tip.
100%. The next massive tip first homeowners make mistakes on is they're going to their bank directly, and they're also missing out on a bunch of grants available. I had Santip again. We assisted. He actually came to me already having a pre-approval in place from his bank. He had a Big Four bank that gave him a pre-approval, and he gave me a buzz watching our YouTube channel. So hit us up if you need any assistance, 1300-088-065, where he wanted to look at his position. He wanted to look at where he stood as he had his pre-approval in place from his Big Four bank, but they really didn't explain anything to him. When we uncovered his situation, we realized that he qualified for the home guarantee scheme, which actually meant he'd save $15,000 in lender's mortgage insurance, which is a massive amount of money not to be paying. The banker he'd got the pre-approval with said nothing about it. He didn't even realize he qualified for it. So I think a big tip here, and a big mistake we see a lot of first homeowners make, is they don't understand the grant schemes, and generally lending options available out there other than what they've got directly with their bank, and getting a pre-approval directly from their bank without talking to a mortgage broker.
Yeah, I had this exact same scenario actually. Maybe 3 or 4 weeks ago, Ganesh, one of the clients that came along, had been dealing with his bank for a couple of weeks, had found a property, had a contract signed, offer accepted. Then the bank was saying because of where the property was, so he was living in Brisbane, working in Noosa, and driving sort of 2 hours basically either way, which is I guess in Sydney, like that's a normal commute. Sometimes it's a bit long, but anyway, his bank said because it's 2 hour commute, we don't see that as acceptable for a home to live in. You need to buy the property as an investment. So they were forcing him to pay higher interest rates, forfeit his stamp duty concession, and also forfeit his first home loan deposit scheme concession. So they were basically making him pay an extra $10,000 in stamp duty, $15,000 in lender's mortgage insurance. It was a genuine stitch up. Anyway, he contacted us. Same thing, watch our YouTube. So, hey, Ganesh, what's happening? And we ended up getting him a spot on the first home loan deposit scheme spot, saved him all that money, got him a way lower interest rate and a better deal overall. So I think definitely it's worth sort of second opinion. Nathan, you had another one with the lender's mortgage insurance waiver as well, for a job. Maybe take us through that.
Yeah, definitely. So depending on your occupation as well, you might not qualify for any schemes, grants, or anything else, but there is LMI, lenders mortgage insurance waivers for doctors, accountants, lawyers, and some other professions. So a lot of times people, once again, don't really know these things. They might be a doctor, a lawyer, or an accountant, and they've done an application with the lender. They're paying the mortgage insurance, but they don't realize they actually qualify for a mortgage insurance waiver. Even some lenders that have the waivers do have income caps where other banks don't. So this is where it really makes sense to work with a broker here, where we can find the best lending option that's going to be suitable for you. Because if you go to your bank and they say, no, you don't qualify for the LMI waiver, you might know about it, whereas another lender has it and has no income requirements, that can be a huge difference, and it can save you thousands of dollars in unnecessary costs.
Yeah, this happened with me with Jake the other day, who's a physio. And so he contacted his bank saying, hey, I've got like a 10% deposit. Can you get me a loan? And different banks give different interest rate discounts depending on your deposit. So some don't care. If you got a 10% deposit, you got 20% deposit, you got 30%, they kind of see everyone the same. Others say, well, if you got a 10% deposit, you're higher risk to us and we're going to give you a rate at 4% or something like that. Anyway, we did our research, found we had a couple of lenders that would waive the lender's mortgage insurance and also look at his loan as if he had a 20% deposit because he was a physio qualifying professional. So it was the difference between paying a lot higher interest rate and also that big chunky lender's mortgage insurance, which is added to the loan, added to your debt, extra payments, it just makes it tougher. So it's definitely worth sort of considering that because you might be eligible for schemes and different grants and stuff. And like Nathan said, that you didn't otherwise know about.
And I think a good thing here is there are some, occupational therapists and other professions that have recently come on board and been able to get these LMI lenders mortgage insurance waivers. So it is important to check. Once again, hit us up if you have questions. We can certainly look at it and see what we can do. The third biggest mistake and the last mistake that we see every first homeowner make is thinking their pre-approval is rock solid, unconditional, they're locked in, when unfortunately it's not. We've had many times where clients have called us, they've been pre-approved with another broker, another lender, and they've actually been declined when they went ahead with going ahead for the purchase. Number of factors that can influence a bank's decision. The bank can reassess your position. If your income or your circumstances have changed, they can turn around and say, no, we previously conditionally approved it, but based on your updated circumstances, we're not going to give you the loan. Other factors include postcodes. So some lenders have postcode restrictions where they might actually say, well, you purchase in a postcode where we're not comfortable in lending over a certain amount because you want a 95% lend in this area. We're not going to do it. High density properties and a bunch of different things. Jaden, this one here.
Yeah, the list goes on. It can be any of those factors. It can be even just if you had a temporary drop in your payslip, it'll cause the bank to reassess. It can be just direct debit on your statement that wasn't there that they've asked for. So many factors in there. So you definitely want to make sure, again, like I said earlier, things can change, but the market's very dynamic. And if you only got one bank, you're not going to have a lot of options. So that's where we as a mortgage broker can help. Different lenders, even with one the other day, a client I was helping out with her first home buyers, their borrowing capacity range from sort of 500 to 400,000, $100,000 difference between the banks, because some wouldn't use like scholarship income, which one of the parties sort of had, and some didn't actually use any family tax benefits. So there's all this other stuff in there that you can use. You can look at paying out HECS debt. There's so much you can do, but you kind of need to have someone that's on your side, and that's what we do here as your mortgage broker. As a bonus tip, one big mistake I am seeing at the moment, especially with changing and sort of fluctuating market conditions, is not knowing what to pay and the price and the offer, what to make in the market. So a common thing for a lot of first home buyers is, you go out, you're like, oh, I think, I saw units selling in this area for 500,000 last year. It's probably worth 500,000, and not being across the current market. So we'll include a link below. We've got a whole bunch of tools on our website that will help with that process. With our clients, we actually step you through the process of researching how to search for recently sold properties to understand that, because there's nothing more disappointing than constantly be sort of just missing out on places and just missing out in the market. So, definitely look at that. I guess the practical tip there is look at sales from the last 3 months. It's look at properties that have sold in the same street that are comparable, same amount of bedrooms, same type of property. And even ask your broker, or we help out with that with our clients, for a CoreLogic RP data report, which is like an electronic bank valuation, to really narrow down what that property is worth.